Hello and welcome to this video. Today I'm going to be doing a stock analysis on McDonald's. Now, of course, everybody knows what McDonald's make. They make burgers. Now, the reason I want to highlight this today is because in recessions, we see fast food chains doing a lot better than many other branches of the stock market because people still want to eat out and feel like eating out. And then there goes McDonald's. I know, of course, McDonald's has increased their prices over the years, but it is still much cheaper than dining out in most countries. As you can see, of course, we did see a bit of a fall here in the last week, and that is, of course, as you can see, because the liberation date was 4 days ago, so everything in the stock market has dropped recently. Yeah. Also, remember, if you like this video, please don't forget to like and subscribe and comment any other videos for me to make. And this isn't financial advice; this is purely for entertainment and educational purposes. Now, if we take a look at the graph, you can see it is quite cyclical, and by that I mean it gains and falls quite a lot. As you can see, we were all the way down in 244 and then up to 320, then all the way up to 325, and now we're currently trading at 300. So it is quite ups and downs in this stock, but they pay out dividends, as you can see, quite often. As you can see here, they pay out the dividends is at 2.2%, but they pay them out 4 times a year, which I like quite a lot because this means, of course, you can easily reinvest them if as they don't come once every year or once every 2 times every year. So you can easily get that snowball effect rolling. That's why I like McDonald's quite a lot. Also, just the fact that they are a market leader within the fast food in the world, I don't see any other company beating them at all. Now, we currently closed on a previous stop. As you can see, no, it's not stop. Bottom formation here, as you can see. We have some tops here, some more tops, and a single breakout here. So it is performing quite decently, as you can also see. If we make the line even bigger, we can see it is also a previous top all the way from back in January in 24. So that is why it is testing out at this point exactly. So it is quite decent at the moment. Of course, we will have to see if it breaks down even further. Then chances are it's going to be trading a. We don't have that great support lines. We have a couple. We have one right below that. We have some, but it's not that big. Otherwise, we need to get down here before we have a proper support line, which of course would be quite bad, as that would be about 18-17% off this top of the stock. Now, their earnings, as you can see here, they're quite decent. I am impressed to see that they missed them 3 or 4 times last year, down 0.6%, down 3.3%, up 0.7%, and then again down by 0.6%. So of course they could do better, and you can see they're even guiding lower. I don't know the exact purpose of this because, of course, some early years we did see prices on something as frying oil and other stuff get crazy expensive, but I'm not sure as of why it is right now. Now, as you can see, annually they make quite decent money and they have very high margins, of course, at around. As you can see, the lowest is 24% and the highest is 33%, so they make amazing margins. Which is also why I like the company, as you just know they are raking in money, which means they have a quite large coffin of money in the back, which is of course great. Now, if we look at the seasonals here, if we go back to 2010, as you can see, it is a quite decent stock. The years we saw the biggest drop was 10%, which is barely anything at all. But as you can see, more often than not, it actually performs quite decently. This isn't going to be the one that makes you rich, but it is a nice thing to have in your portfolio. It might get, as you can see, top out of 43% and 30%, but it is quite decent to just have in your portfolio, just taking some of the risk out. Say you have a lot of risky stocks, McDonald's would be a great backup to just have to make sure you have a great bottom for your portfolio. Now, currently there is a sell for the day, of course, no wonder, and for the month it is a buy. That's because we were seeing, as you can see here, a golden cross forming here on the 27th of March, as it was trading in upwards trajectory, trading all the way up from 300, from what is this, 296 all the way up to 320. So it was almost 10% in what is that, 2 weeks, which is quite great. But then, of course, we did see this great tumble. So now the analyst rating on this chart, on this average price target, is 330, which is 10% up from where we are right now. I think it could be a bit better than that. But the interesting thing is we have 21 strong buy, 4 buy, and 15 hold. So yeah, I think chances are it's going to be a bit more than this. I think 335, 340 is a bit more realistic, as if we are entering into a recession, McDonald's is going to live off greatly off that because people, as I said, still want to eat out and feel like dining out. And then more often than not, they just go to McDonald's. And we have zero sales in this stock because it is just grandfathered into perpetuity in the fast food chains and is the largest in the world, of course. So very, very interesting. I like it quite a lot. You can also see in the volatility, we did fall quite far down. As you can see, chances are the volatility curve is falling down. So yeah, quite interesting indeed to see that it's falling down, which means chances are it's gonna move less at the moment. But of course, these are a bit uneasy to read often. Now, the RSI for the stock is currently also quite poor. As you can see, we are currently in the bottom, which is a sellout, which is quite interesting to see that the average, the yellow one here, is still that far above, which means chances are it's going to dip even more. So I do think we might see a bit of a plummet again Monday, but it is a great stock to keep in the long run. Now, if you did like this video, please don't forget to like and subscribe.